Hello, I'm James Yardley, Senior Research Analyst at Fund Caliber, and today I'm joined by the elite rated manager Luciano Diana of the Pictet Global Environmental Opportunities Fund. Thank you very much for joining us, Luciano.
Good afternoon, James. Thank you for having me.
Now, I know your fund is very much focused on the environment, and one of the things you use is the planetary boundary frameworks. Can you tell our viewers what that is and what it means for you as an investor?
Absolutely. So the planetary boundaries is a scientific framework that was developed in 2009 by a group of scientists, and it tells us that there's 9 dimensions that are really important for the environment. Climate change is one of these dimensions, is very important, but it's not the only one. The others that are really important are also the biodiversity dimension, the freshwater use dimension, the nitrogen cycle dimension, chemical pollution, and some others. And for each one of these dimensions, the scientists are giving us a boundary that should not be crossed. If the planet crosses this boundary, then we risk having a nonlinear and unpredictable change. So what we want is for our economy to sit within these boundaries that the scientists are giving us. And in other words, that means not over-consuming natural resources and not polluting the planet. What it means for us as investors is that it's a tool that we use to build an investment universe, so to build a list of potential companies to invest in. And so the first criteria that we use is whether a company is within the boundaries or not. The second criteria is whether this company also provides solutions for the rest of the economy to be within the boundaries. And we have identified around 400 of such companies, and that constitutes our investment universe for the Global Environmental Opportunities Fund.
Thank you. Yes, I think it's very interesting with your fund that it focuses on a lot more than just climate change, and I think that's a really unique point of it. We've been hearing a lot recently about Green New Deals and green infrastructure helping the economic recovery. We've heard a lot from Boris Johnson in the UK about this recently. What opportunities is this creating for you and for investors?
Yes, this is a very favorable policy backdrop. We are very encouraged by what we're hearing, especially in this difficult economic environment. Europe is definitely leading the way, as you mentioned. We are going to be waiting for the US elections to see whether we're going to have some favorable policy there as well. And then China also is planning the next 5 years, and a lot of the key initiatives there are going to be related to the green economy, so to speak. And this creates a lot of opportunities, as you say, across a number of technologies. So first of all is the energy sector. So the energy transition is accelerating, renewable energy, energy efficiency. In the transport sector, for example, we're seeing increased demand for electric vehicles, but also in the building sector, increased demand for renovation, and in the industrial sector. We're seeing a lot of adoption of digitalization technologies that are helping the industrial sector become less resource intensive. We also see a lot of opportunities in the water technology space, in the pollution control area. For example, when we think about testing and monitoring of the quality of the air and the soil and the water, environmental consulting. And we also see a lot of opportunities, and this is probably a little bit more early stage, in sustainable agriculture, which is basically everything that has to do with the plant-based food, in particular plant-based meat. That's a nascent but very promising industry.
And for a long time, I think the general public has perhaps perceived corporations and investors as being part of the problem when it comes to the environment and climate change. But that feels like that's starting to change now. How is your fund helping with that? And what more can we do with our savings to drive this change going forward?
Yeah, absolutely. So the private sector has a clear key role to play here because governments can only set the direction. At the end of the day, though, it's the companies that need to put the research and development in the right areas and innovate and launch the right products and services. So we have seen an acceleration in innovation in the private sector. We are seeing, in particular, something that I find very encouraging in the energy space, the oil and gas sector really wanting to pivot towards a greener mix. This was, in my opinion, a bit of greenwashing a few years ago. I think that we are past that stage. This is real concrete plans from the oil and gas industry to really diversify their business mix. But also we are seeing this in the automotive sector with the large automakers, the incumbents that are investing billions of dollars in electrification. So we're seeing this a little bit across the board, and that's encouraging. In our fund as investors, our role is to direct the capital to the right companies, and that creates a dynamic where, as a matter of fact, the cost of capital that these companies have to do new projects becomes lower. So it becomes easier for them to finance these new projects.
Thank you. And maybe diving a bit into your portfolio and two of the themes which you've got, could you tell us a little bit more about sustainable agriculture and forestry?
Yeah, so sustainable agriculture is really linked to the opportunities that tie to one of the planetary boundaries, which is the nitrogen cycle. So the scientists are telling us that modern agriculture is overproducing fertilizers. Fertilizers contain nitrogen, and when nitrogen is not absorbed by the soil, it runs off. It runs off in the rivers and then eventually into the oceans. And what this creates is a whole range of problems for marine life, because when there's too much nitrogen, there's algae bloom and there's dead zones. So areas of the ocean with lower oxygen content. This is something that we've seen more and more over the years. Not to mention, of course, the CO2 footprint of the agricultural sector. So we know that intensive agriculture is a sector of the economy that has a very, very high impact on the environment along different dimensions: climate change, nitrogen cycle, as well as biodiversity. And what we are looking at here are companies that are providing alternative solutions. So it could be organic food. At the moment, we don't have positions in the fund, but we used to have them in the past. They were bought. For example, Whole Foods was bought by Amazon and it was in our portfolio. Today we have natural ingredients companies. For example, Simrise and Givaudan, they're two European leaders in this space, and they're driven by the consumer demand for natural flavors and ingredients in food as opposed to artificial ones. But what is really exciting, and this is really, again, very early stage, is the whole plant-based theme, because we are able these days to produce meat effectively from proteins, from pea proteins, and that has a fraction of the environmental impact of traditional meat. So the key is to make sure that this new meat, and there's companies that are coming into the market that investors can invest in. The key is that the taste has to be good enough for consumers to really start to consume them, and at the moment, plant-based alternatives to meat represent maybe 3% of the total in the United States, 3-4%. We think that this over the next 10 years could reach 10-15%. So it's a huge potential opportunity, and with a massive impact, positive impact on the environment.
And what other green tech are you seeing? What other innovations are coming through, and what opportunities are you seeing?
From a technology perspective, so a big part of our fund is linked to innovation and technology. And what we see is for example, a lot of activity in the manufacturing industry, technologies like simulation or design and engineering software. And this is software that helps the manufacturers to minimize the carbon footprint of products and optimize raw material usage. So simulation is becoming more and more pervasive, is becoming more advanced. There's a few pure plays in the market that investors can invest in, and this has a big impact. There's other examples that I can make in the building and construction industry. For example, the use of software is still relatively limited. So there's a whole series of solutions called the building information modeling software that are helping to digitize the construction sector. And again, with very concrete benefits in terms of raw material usage. We call all of this dematerialized economy. So these are solutions to have the physical and the digital worlds converge. And the more we digitize the way that we manufacture products, the way that we design buildings, the more we can save and the more we can decouple the economic growth from raw material usage, which is really one of the key aims of the solutions that we want to invest in.
Luciano, thank you very much for joining us today. A very interesting and unique fund.
Thank you very much.
And if you'd like to learn more about the Pictet Global Environmental Opportunities Fund, please visit fundcaliber.com.